Well, the markets are open up here on a Thursday. Let's take a look at how they're starting out, and then I want to bring in some expert commentary along the way as well. Let's take a first look here for you on the corn market, see what things are doing right now. We had a little softer tone here over the evening session here on the Globex. And right now, March corn is indeed a little weaker yet. It is down 2 1/4 cents at 351.5. We have the July down 2 at 368.5 right now, so that's on the low of the overnight range on both of those. If you look at the soybean trade, how are we opening up there? Well, we have January down a nickel now at 950.5. Overnight, it was only down a couple of cents. We have the July contract now down 5 at 984 per bushel. Let's take a look at the wheat. Yesterday, wheat was higher everywhere. Today, it's lower. We have March Chicago wheat down 2 at 426 per bushel. On the Kansas City market, on the March contract, we're down 1.5 pennies. We're now at 424 per bushel. And if you look at Minneapolis spring wheat, we currently have March down 2 at 619.25. How about cotton? That's the one that has been soaring ahead this week, still higher. 79.14 is now our last trade on the March. That puts it 19 points higher on the day. Dewey Strickler joins us right now. He's with AgWatch Market Advisors in Franklin, Kentucky. Other than being cold, what's driving the markets here this morning, Dewey?
I don't know if there's any one particular thing driving them here this morning. We're looking only about one more day left in the trading year for 2017. And I kind of take the activity that we see between Christmas and New Year's with a grain of salt, because you got to remember what you're looking at. You've got like end of the month position squaring, end of the quarter, and year end. So, pretty well anything can go. We're going to have to wait till we get into January, and really we'll have a clean or fresh slate then.
Now, I know you follow all the outside markets in the financial realm to see what kind of market impact that can have and the money flow in and out of each of these different segments for investment money. What's going on there right now as we get toward the end of the year here?
Well, we still got money flowing into the stock market. We really have not seen any profit taken by the large investors here. They seem very comfy and keeping their positions here. And I don't expect that we'll see a very sharp drop or profit taking going into, let's say, tomorrow or year end.
I believe we have a look at the Dow to see how it's opening up here this morning in New York, and we'll see if it's going up or down right now. So let's go ahead and pull that up on the screen. Right now it is actually over 24,800 now. It's at 24,808 roughly, and that is 33 points higher on the day. Running out of time to hit 25,000, Dewey. I don't know if they're going to be able to get that done or not, but boy, it has been quite a year anyway, right?
It's been quite a year, and I expect we will try to edge this Dow up into about the 25,000 mark. But as I said for quite some time, we're just running on fumes in this stock market. We got a lot of issues that I think we're going to have to contend with in 2017. We've gotten to the point, we've kicked the can down the road, and I don't think the can's going to budge much anymore.
And Dewey, again, I have to give you kudos, because a year ago, you were the only one I ever talked to that predicted we'd hit 24,000 in the Dow, and indeed we did. And at the time, it seemed almost unreachable, and we made several thousand points gain after that. So anyway, you had that in your sights here about a year ahead of time. Appreciate that very much for you sharing that with our audience back then, way back then. Dewey Strickler is with us. He's with AgWatch Market Advisors, and we're going to take a look at the open in your livestock trade when we come back right after this. Well, we saw where the Dow Jones Industrial Average was firming up a little bit here this morning. It has cleared 24,800. Let's take a look at the dollar and the crude oil, and all the talk about the cold weather all across the northeastern half of the country. That has a lot of concern on the energy markets. Right now in the dollar value, we have the March futures down 280 points once again, and it's quoted at 92.330. That could be very significant moving forward. So it continues to slide on that value. How about crude oil this morning? How's it opening up? Well, right now we're down 5 cents on the West Texas crude, February quoted at $59.59 per barrel. And on the heating oil that everybody's interested in right now, it is up about 9/10 of a penny on the January futures. It's at 204.9 per gallon right now. Of course, that's how they trade diesel fuel on the NYMEX in New York. Now to the livestock trade. How are we opening up our live cattle market? So far, we have the December 48 higher at 122.50. Remember, that one goes off the board tomorrow. We have the February contract 15 higher at 121.15 per hundredweight. And we have April up just 1 tick, 2 pennies higher at 121.72. The feeder cattle side, we have the January now 43 lower today at 144.75. March down 27 at 141.45. And on the lean hogs, this is how we're opening today. We're mixed. We have February down 13 at 70.90. April down 20 at 75.08. However, we have the May up a couple of ticks at 79.95. Got as high as 80.20 in the early going. Dewey Strickler rejoins us. He's with AgWatch Market Advisors in Franklin, Kentucky. That was kind of an inconclusive close on the livestock trade yesterday when we wrapped everything up. It was a mixed affair in the cattle and the hogs. Technically speaking, when you look at that market, what kind of potential do we have here between now and the end of the week and the end of the year?
Well, one thing I noticed on the fed cattle to kick things off here is that you did have a little bit of a downside reversal in the February contract yesterday when the market got up here to this 122.35. When I look at the price action from the low that we had here a couple of weeks ago at 117.57, this looks like a corrective move up. So that said, unless we take out yesterday's high, this market looks like could come down and take out some of this support.
So where are we? Are we in the relative strength index and some of those technical indicators? Is it still in the very lower end of the range? Is it kind of mid-range right now? Where do you see it?
Well, where I see, and I look at these momentum indicators, they're actually still pointed up, but they are mostly in a neutral range there. A couple of them are starting to get into an overbought level, but not just quite yet.
How about on the hogs, Dewey?
Well, when I look at the hog market here, the hog market, we had a little bit of a topping pattern when you look at the candlestick charts here yesterday, but this market, when I look at the pattern, it looks like we still maybe have a little more upside, get up to maybe 72.5 basis of Feb, and I can't rule out setting the new contract high, maybe up around 73.5, somewhere up in there.
So is that basically where the highs were around the 1st of November there?
Yeah, pretty well.
All right.
I think we may try to take those out by just a marginal amount.
Oh, okay. Well, Dewey, thanks for spelling that out. Very good to talk with you again. Dewey Strickler is with AgWatch Market Advisors in Franklin, Kentucky. We're off and running, Christina.
Off and running, and the Dow is surging to start the new day.
Only a day and a half left to go.
All right.
Goodness.
Thank you so much, Markets Editor Marlon Bowling.